Hello everybody, my name is Matt and we're here to talk about the stock market today. We'll do weekly videos on investing, finance, and things related to everyday success. I'm all about passive income and I really try to follow the stock market for you guys, and we're going to make weekly videos based on that. So even though the stock market's kind of in a bad situation with probably nearing recession, the stock market's at its peak. That's often what it does before a recession. With all the Chinese trade talks and the pending Fed cuts coming later in the year, the stock market's really high. They're trading on expectations at this point rather than realistic values for the companies. So I think safe investments right now, and I say safe loosely because really any stocks that you buy is going to be a risk right now because the stock market's going to start going down this next quarter quite aggressively, I'm sure. So any opinions that I give you on stocks, they're just my opinions. Don't make your trades based on my opinions. Even if I do well with the trades, I may get in and out at a different time than you. Any trades you make should be based on your research and your opinions. It's your money, you worked hard for it. Never base your market trades on somebody else's opinions. So having said that, I think Apple's going up pretty good because they're talking about acquiring part of Intel. I don't really get into buying into companies and holding through earnings. So Apple's having earnings on the 30th, like Tesla's having earnings tomorrow. I'd buy into a company right up, until the end of the day because the earnings are after hours for these two companies. I'd buy in, hold till 3:50, 4 o'clock, and then sell them the rising price because the market's excited because they're going into earnings. But I never really hold through earnings. You're guaranteed on a company that has a good projection to ride up, with the market pre-earnings. But when earnings hit, it could go south, or you don't know what's going to happen. So it's not really a good investment to hold companies through earnings unless you're as close to 100% sure as possible that the company's going to release good earnings. But it's very hard to ever be 100%. If you're going to make a good, solid investment, it's always good to write up the earnings, right before the close of day, and then sell off and take your, profit, lock in your profit and leave it at that. So Tesla's doing pretty well. I've made a lot of money off them in the last couple of months, but I'm not sure what they're going to do in earnings. More than likely they'll do well, but Tesla's like an inverse to the market kind of company. Sometimes they do good in earnings and their stock goes down. Sometimes they do horrible in earnings and have a big loss and their stock goes through the roof. Tesla's a weird, volatile stock. So I'm going to stick with them until the end of the day tomorrow and probably sell off. It's very unlikely I'll hold them through earnings, but it's a possibility. We'll see how the day goes. And as for Apple, they're going to do earnings on the 30th. It's probably going to be a similar thing. I'm not going to hold through earnings. I might buy before earnings, sell, and then after earnings post, give it a couple days, let the stock dip back down, then I'll buy and hold through September. Beginning of September, Apple always releases a new iPhone, and you'll get a good stock profit out of that. But holding through earnings, or even holding through too far, I'd say more than 24 hours past their new iPhone release, you're just going to lose money. The stock's going to go down after the hype's over. So that's my advice for stocks this week. Otherwise, be ready to pull out. The stock market's going to go down quite abruptly over the next quarter. Get an inverse ETF, inverse to the Dow, or inverse to the NASDAQ, or something like that, or maybe crude's doing okay right now. It's up and down if you want to follow political markets and stuff like that. Get into commodities or something like that. But a lot of these tech stocks and everything, they're going to dip down. And if you're betting inverse to the Dow or NASDAQ or something, then you'll probably do well. But otherwise, you're gonna have to really be careful with your money. A lot of earnings this quarter are really bad. 50-50 at best. This isn't a good earnings season. Everybody's starting, as soon as earnings is over, they're projecting the next quarter as a loss, or certainly a dip in revenue. So next quarter is going to be bad regardless. You're going to lose money during the quarter, and then the next earnings cycle is going to be really bad, I think. So that's my advice for that. Like I said, I think everybody's pricing in the Fed dropping, rates, they're pricing in the trade talks with China, hoping that's going to come out positive. But that's another thing. If these trade talks come out negative, tech stocks and a lot of other stocks are really going to dip. Why risk it? If you're going to day trade or something, it's fine. But if you're swing trading over multiple days, I'd really be careful, because it's a very volatile time to be in the market. I think we're going to be in a recession in the next 6 months for sure. So that could easily start in the next month or two. We'll start sliding. So just be careful out there. If you got any questions, post them in the comments. Make sure you subscribe and like the channel. If you have any questions, ask them in the comments and we'll get back to you. All right, good luck trading.